Hey guys, I'm back again. I was sick past week and a half. We got a winter storm here. It was pretty cold, pretty snowing and freezing everything. So it got me sick. So I didn't want to record a YouTube video and coughing and editing it. Uh, yeah, so I'm back at it again. I was trading past week, which I shouldn't have. When you're sick, you don't want to trade in because you're not in the right state of mind. So I took a lot of bad trades, lost a couple accounts, and broke even on some other accounts. But I'm back at it again, ready to go, almost fully recovered. So today I want to show you guys two indicators. One indicator will show you, will help you when to stay in the trade, and the other indicator will show you how to trade a range bound market. And if you don't know what is a range bound market, this is our range bound market when we are in a very tight range. We are not going up, we are not going down, we're kind of in the same sort of range. And the other indicator will show you if you wanna stay in the same trade for longer. So without any further ado, let's get right into it. I missed making YouTube videos. So the first one is very simple. It's called Heikin Ashi candle. You can there's two ways you can look at it. So one way is you can add it as your favorite. You have your regular candles and you have your Heikin Ashi candle. You can put it as your favorite. So if you put it as your favorite, you can change it to a different color code so you don't mistake it with your regular candle colors. So there are two different ways you can kind of stay in the same trade. So when you see a doji candle like this, that means the trend is about to be reversed the other way around. And when you see a one-way candlestick with no bottom wick, that means you can stay in that trend until the price gives you a doji candle. Same thing if it goes when you're selling. So if there's no top wick when you're selling, that means you can still stay in that same trend until you get a doji candle of the opposite color. So that's that one. And if you want to add that as an indicator, you can go to your indicator, search for Heikin Ashi. There you go. So add it as your favorite. Add it to your chart, and it'll go down here. Mine has a different color because I went to the setting and I changed the color so it matches my Heikin Ashi candle on my chart. So that way you have this indicator down below. Let's say you're in a 1 minute trend. Let's see if I can find a good one. So yeah, in here you can see if you're in a good trend. You know that this one would be probably your last one to be in it because the candle is smaller and you got a doji Heikin Ashi candle right after. So that's when you can get a. So when you see a doji candle on the Heikin Ashi, that means it's the beginning of the reversal or the beginning of the continuation of the next trend. So here you can see a big doji and it was the beginning of that move. Same thing here. If you say doji here, you can see that move. So this one would have given you a 1-to-1. This one would have given you a 1-to-1. So it's pretty easy. If you combine it with a certain liquidity area, it works perfect because you can see here we all have a pre-market open that we took out. We got the doji here and we got in, and you can get out when you see a doji here. Same goes on the other way around. If you want to, this works perfectly if you want to hit like base hit. You can see we took out the pre-market swing. We took it out. We got this. We got the doji in here at the same time, and you can just get in. It's about 200 ticks, I believe so. Yeah, 200 ticks, 200 ticks. Yeah, easy 1-to-1, 50 point, and you're done for the day. If you copy trading, that's all you need. So the second one that I want to go over is the close this one. The second one is called statistic, a stochastic. Um, here Stochastic. So you can put it as your favorite, add it in here. Just search for stochastic. That's the first one you see, not the RSI. The RSI will just confuse you. The regular stochastic, you just add it to your favorite, add it to your chart. You can kind of see it in here. And the stochastic works perfectly if you're, doesn't really matter. You can be in a so if you're in a trending market like this, excuse me, if you're in the trending market, you can see when the trend is over. Or if you're in a range bound market like this, you can kind of see when we are overbought or oversold in these areas. And I'm gonna show you an example of it. Show you an example of it on the 1 minute, on the yeah, I'm showing you an example of a 50-minute, 5-minute, and 1 minute. And one of the biggest thing with this indicator is if you see a divergence, that's how you know we are about to switch trend. So for example, on the Friday market, we had this swing that we took out from the previous day. So as soon as we took it, we start consolidating. This is a 15-minute range. So this was the top of the swing. So you can kind of see the top of the swing here. And this is the low of that swing on the overbought. So we have a 0 to 100 kind of, it goes from 0 to 100. So the blue line called the K value, the orange line called the D value. So what you want to see is if the blue line, which is the K value, gets below the gets close below the orange line, and it also close within that range, within the 80 range. If you're selling, you want it to close below the 80, and if you're buying, you want to be close below the 20. And you can also set an alert if you don't want to sit on the chart and watch this indicator. And the divergences I'm talking about is here. So if you're here, we are selling. Here we're still on the buying section, around here to somewhere around here. So here you can see we're still buying in here. You can see that here we are buying, but here we are selling. If you see this divergence, especially after taking a certain high, so we took out this high here. So we took out this high here. We have this divergence here. So the next thing you want to look at is pretty much once we close below this range. So we're just waiting. So in this one, as you can see, we close below this orange line and we are closed below the 80-point line. On the we are done with overbuying, and we're gonna see if we can go hit a certain swing in this area. So you just sell here. That was loud. Then you can put your stop loss either at these swing lows, swing highs, around 200 ticks, and let's say 200 ticks here, or you can target a certain area. So you can target this POI if you want. You can target this swing. You can target this swing. But let's say you don't want to target that much. You're just happy with a 1-to-1. If you're buying with 1 or 2 contract, that's all you need, and that's it. That was our 15-minute example. Go to 5-minute. If I can show you a 5-minute example. Here you can see a 5-minute buy and a 5-minute sells as well. So here if I can show it to you, there we go. See in this line, we sold below this line. After we overtook the overbought section, we closed below it. We also closed bearish. You can just get in here. Put that one there. And then you can either target this recent swing or just go for the 1-to-1, which is around 390. Yeah, you might as well target that area. There we go. So for 1-to-1, it would have hit. Same goes the other way around. Once we took out this most recent swing, and like I said, it works perfectly with the range bound market like this. On the 5-minute, we went oversold in this area again, and then in this candle, in this one, we closed above the 20% line, and we also closed through the orange line. So it doesn't matter if you're buying or selling, you always want to see the blue line to close on the left side of the orange. So if you're selling, you can see here on the left side. If you're buying, again on the left side, both of them close through the orange line. Both of them close either above the 20% for buying and below the 80% for selling. And here you could have done the same thing for buy position here, below this swing and above this area, and boom, 1-to-1 and you're done. And if you trade on the 1-minute, you can also do the same thing. Let me just show you in the back testing session. So start a new one. So this is the pre-market. So we have marked our pre-market low, then pre-market swing high, and also one of the most recent previous day swing high. So those are our target. And on the 1-minute, we are already on the overbought section. So we're going to see if we're going to take out that high and start hitting this high or the other way around. And on the higher time frame, if you look at the 5-minute, we're already going down. If you look at the 15-minute, we are start to going down. So we want to, if 2 or 3 of these time frames align, like if the 5-minute and 1-minute align, that's even better. So the 5-minute is already going down and the 1-minute is already overbought. So we just wait for it. There you go. So that's after the market open. It's at 9:33. We closed the blue line closed below the 80 and also closed through these orange line. So you sell here. Put your stop loss above this swing. That's 261 ticks. So you have 2 options. You can either target this swing, that's a 1-to-2, or as soon as you hit your 1-to-1, just close the trade or move your stop loss to break even. So here we go. That's our 1-to-1. And we already went over the oversold. And then I just put my to break even. There you go. So you're done here. We took out that area. Since we are trading in a range, so we are most likely, since we didn't take out that high, we're probably gonna go take out that high. That's how I think about it. If you already taken a certain high or a certain high or a certain low, then it becomes less probable. And we're gonna see if we're gonna close above that line right here. There we go. We got a doji here, and we're about to go up. There we go. So we close above on the left side of the orange line. We inverse this gap, this tiny gap here. We closed above this line as well. We are within that range. So you just buy here, put your stop loss below this swing, and you can target this swing again. Either target that swing or just target your 1-to-1 if you're trading prop firm and you just want to hit base it. There you go. So once you're that high, 460, you can either close the trade or move your stop loss. And if you're that close, you just move it a little bit more. And there you go. So you can see how how you can kind of trade both side of the trade. But if your bias is just long, you can just wait for the price to be oversold. You just go for it. And if it's a continuation, it'll show you the same thing. So this indicator helps you to know when the correction is over. Also helps you with the range bound market, which in the past January and February with the Trump trading, war news, all kind of crazy news, we either gonna get lots of crazy like one-way trend, or we are getting a lot of range bound market. So in the range bound market, it helps you to know when we are oversold or overbought. And in the trending, it will show you when to get in because you want to wait for the correction when we are trading upwards. Or if you are trending downward, you kind of want to know when the correction is over. And this will help you. And you want to combine it with 5 minute and 1 minute, 15 minute and 5 minute, or see if the 15 minute, 5 minute, and 1 minute is all aligning. And if you want to look at like the higher time frame, you can kind of see on the higher time frame if you're oversold in here. You can kind of see when the oversold is over on the 1 hour. So you kind of see this around here. Then the next candle, you can go to 5 or 15 minutes and anticipate a oversold area to get in for a buy, or vice versa. That's it for today. I just wanted to show you guys those two. Hopefully it was helpful because we're getting a lot of chop uh, in this time of the market. And I've been trading for a couple of years. I've never seen a market to be this difficult to trade in. So that should tell you something because there's a lot of uncertainty. There's a lot of crazy news. I believe we are in the beginning of a mini recession. So tools like this will help you out. If you go to hourly, 4 hour, daily, even on the daily, let's say you go on the daily, in here you can kind of see that, hey, the market has shifted. That means we're going to go from here, as you can see on the overbought section, we're going to go back to a oversell section. And as you can see the past 5 days, if you're swing trading or if you're just day trade, you kind of want to come see your daily area. If you're above the orange line or below the orange line, that's how you can kind of make your decision for the day. Am I gonna sell today? Am I gonna buy today? Etc. Etc. So it'll help you when it's ranging, and it'll help you when it's going up. So for example, here when we're going up, you can kind of see if you're still above that line, and we still haven't hit that area. So you can just every day for the next 5, 6 days, just every day anticipate long, long, long instead of second guessing yourself. Am I buying? Am I selling? Same thing on the other way around. When we are in the overbought section, you can also see we're consolidating, and you can go to a lower time frame to do your range trading. And when you're trading, you can also see if you're in the beginning of the trading trending, if you're in the middle of the trend, or if you're at the end of the trend. So you can kind of mix and match it with different type of time frame and determine if you're buying, selling, up or down. Look at the daily, look at the 4 hour, look at the 1 hour, kind of determine your direction of the market for the next 2-3 hours if you're day trading, or the next couple of days if you're swing trading. Hopefully that was helpful. Leave your comments, questions, feedbacks down in the comment section, and join the community. It's a free community, and I answer people's trading question in there. And there's also a coaching group that I'm gonna reopen for the next month. If you're interested in a one-on-one, you can just join in. You don't have to. I have a lot of free content that'll help you out start trading. But if you feel like you need it, you can go ahead and do it. Until the next one, love you guys, and leave a like and comment.